subject for corporates who want to be able to scale in their operations of cash and how they run their business. Um, the very fact is that your ability to manage your cash depends on how much information you can get about the cash, and that also is impacted about on what levels of solutions you have in place. So I'm delighted to have this conversation with our host. I know that there will be doing some presentations along the way. I'm happy to see that, and you know, uh, Mr. Bolade here is I want to call him a colleague, you know, in the transaction banking side of it, and we particularly have, when I say we, I'm talking about my principal. We have a very solid relationship, and for Ceviant, we, you know, building up, you know, those relationships for recently, and I want to also acknowledge the fact that you were a major sponsor at our last conference. So thank you very much for that. We hope that you will continue to partner with us as we move forward. So my job here really is just very simple. So I don't want to bore you with my speech. My job here is just to get out of the way so that these two gentlemen can play tag team and really talk about this subject matter. So how do we go first? Okay, so I'm going to invite Mr. Mobolade. So please give us your thoughts.
Very much. Thank you. And it gives me very great pleasure to share with the Association of Corporate Treasurers. I think what we're discussing, is something that is very strategic, very important for corporate treasury functions. And the idea is for us to just sort of take, a good look at how treasury automation helps achieve global cash visibility, and more importantly, what it does for employee satisfaction. What value it brings to the team. What does this automation do? What sort of efficiencies does it create that creates value? So we'll look at the role of technology in itself, and just take a deep dive into how we believe that it can create value, and how it can help create some efficiencies and optimization. So the idea is that, look, treasury functions are sitting on a whole load of data, a whole load of information that needs to be processed in some form. With that responsibility comes the importance of how do we secure this information. If we look at recent trends, corporate and global businesses have been susceptible to threats around their data, around the information that they carry, that they hold. So the importance of securing this information is very critical. And then the idea is that how do we take the information and share it, basically. In what form are we able to report it with our various stakeholders? The treasury function is one that has multiple stakeholders within its organization, and also out of the organization that the function exists. So the importance of sharing that data becomes also very, very critical. So the idea is that, processes need to be automated, providing real-time visibility for decision making. Where value is to be created is to ensure that the errors that you typically would see are minimized, efficiencies created, ultimate value around costs, reduction of cost, and being able to just streamline the operations and position it for growth, strategic growth. That essentially, is the objective of what technology and leveraging and focusing on technology within the function does. In terms of the architecture or the typical systems architecture that would support this objective, um, typically investments will have to be made in the treasury management system that has the capacity to take inbound information from third-party applications as well. Um, Typically, corporates will be multi-banked and have more than one banking relationship. So the questions around how do you interact with these various banks without necessarily, um, having to log into each bank's application, and the complexities of doing that becomes an objective that technology can help solve while creating efficiencies. And like I said, the ability to leverage off the information that you have in disparate applications in one single application becomes the architecture that we try and create to help achieve the efficiencies that we want to achieve as a treasury function. I'll just sort of like to share, a couple of trends that we see in this journey of investment in technology to help achieve these objectives. One of the big, direction of travel is a lot more investment in cloud technology, treasury management systems that can sit on the cloud, so that integration is easy, so that the information and the applications can be leveraged through disparate channels, whether it's mobile, whether it's on a pad, or seated in the office. I mean, we've all seen how COVID has typically just changed how we function, and how treasury functions that typically, based on concerns around security, didn't want applications that were mobile enabled, didn't want applications that could be accessed on the go, have typically made a U-turn. So cloud technology becomes very key, being able to deploy and deliver that. The value of robotics process automation, like I said, we're depending on the industry set or the sector focus. Quite typically, we're sitting on a huge load of data, a huge load of processes that require, just a repetitive action, whether it's reconciliation, things that typically technology can solve for, so that the treasury function can focus on more strategic things that would create value, whether it's reconciling the cash position, bank statements, and basically trying to just manage the day-to-day. One of the areas where we can leverage technology for more efficiency is robotics process automation, and we've seen that in a couple of markets. The very, very interesting technology that I believe would be a big game changer is blockchain, which when you break it down is just a distributed ledger technology. Blockchain offers a great deal. It's a platform that potentially will create visibility across the entire ecosystem and network of the corporate business, from the supply side to the distributive side. It would help in creating a single source of truth, a single level of integrity for the business, and also just accessibility to information and decision making in a more seamless way, when it eventually sort of takes off in specific segments and sectors in our various markets. Of course, we're already seeing the impact and the value of leveraging APIs for integration to make that as seamless as possible. And of course, the big game changer, the big direction of travel around artificial intelligence, machine learning, and how we can make more predictive, strategic decisions and have insights into our business that were previously not easily available in an almost real-time basis. These are some of the trends that are shaping the type of technology that treasuries are investing in, and the types of capacity that treasury functions are looking to build in their business. So we'll just speak to the approach to delivering this, I've talked about leveraging APIs. Typically, treasuries have banking relationships. Today, it's either you're logging into the banking application, you have an ERP, and basically roles and efforts are being duplicated in that effort. With APIs, you're able to integrate, function, and relate with your finance institution and finance partners in one application that can speak directly to their core banking application. The investments that need to be made around a treasury management system, obviously, typically that process would be RFP'd, and you would identify the treasury management system that is the best fit for your organization, for the scale of the organization, for the sorts of objectives that you want to achieve. Talked about leveraging artificial intelligence so that you're able to get the strategic value out of the investments that you're making, and that you're able to leverage the entire breadth of the treasury management systems capabilities in either cash forecasting tools, access to payments, integrating that to your electronic banking applications of your banks, and being able to relate and interact with those financial institutions in one action or one interaction. So in terms of solutions that will help us deliver this, there are a number of ways or number of key focus items in various forms. So whether it's focusing on the APIs that will look at how you make payments to your suppliers and to your vendors, or you make salary payments or regulatory payments, looking at APIs for your account statement so that reconciliation is easy, focusing on APIs for your sales team so that your receivables and your sales objectives can be better streamlined for decision making and for more strategic information, and leveraging virtual accounts so that again you're able to drill down along your value chain and become more efficient in your interactions and in your ability to drive sales. Talked about host to host, which is a direct integration with your ERP and the banking application, and looking at the quantum and volume of payments that you're able to that you need to make, that you're able to leverage and do that in a manner that is efficient with bulk payments, or also leveraging direct debit capabilities so that there's a lot more efficiency for the business in terms of what it's doing. So in terms of the benefits of automation, I mean, they're quite clear, because when we looked at what our objective and our theme was, it was about how do we leverage technology to create value, cash visibility, while also looking at the goal of employee satisfaction, so that there's an outcome from the benefits of the technology to the business and to the treasury team who are responsible on a day-to-day. So, and I think quite clearly some of the imperatives we've talked about: machine learning, artificial intelligence. One of the things that will help achieve is more efficient and better cash forecasting. Understanding the patterns, understanding the flows, and just looking at historical data and being able to make predictive decision making based on patterns and trends from previous years, and basically getting deeper insights. Treasury managers have a good handle of their business, their go-to for what is the story, what is really going on in the business. But I think leveraging these new technologies provide greater insights in telling those stories and being able to define the future. Market data analysis, looking at your business, your function, looking at yourself relative to your peers, how you managing liquidity, how you managing market events, and being able to sort of take strategic decisions on the back of that. Risk management is at the core of what treasury functions do. The value that automation brings is also being able to help manage risk, whether it's leveraging technology so that you can reduce the events of fraud, or be more proactive when you're using any of these functions and strategic imperatives to deliver your day-to-day function on the treasury side. And if we look at collections, which speaks to the receivables, again, it's an area where, because it speaks to the sales of the business, we're looking to see what are the patterns, what are the insights, where are the flows coming from, who's driving it, who's responsible, how do we incentivize, how do we drive, look at the next layer, what do we need to do to get them up. Specific focus on these key pillars create value, and connect the dots between the investments that have been made on the technology side and the outcomes that is expected from the treasury function. So with regards to the ultimate aim, particularly for treasuries that operate in more than one geography, where we're seeing the need to consolidate and the need to have a greater view for decision making and to be able to make strategic decisions. We're saying, look, what are the trends that we're seeing and what approaches are other markets and other players taking that are useful. And I think this is very important because one of the things, or one of the strategic thrusts that we're seeing from a lot of clients is trying to leverage the value of the Africa Free Trade Agreement that was signed to look at opportunities to enter other markets on the continent. The corporates that have a core are doing this. They've operated in more than one geography for years, but there are also corporates that are looking to embark on this journey. And I think it's important that we highlight some of the things that they can be looking at to help them achieve this objective. One of the things that we've seen is corporates centralize their payments across geographies, so they have payment factories that are responsible for driving the entire payment, irrespective of the geography, from a single location. Of course, there are many factors to consider: multi-currency, the various switching and payments rules in various markets, and understanding that and ensuring that is built. Those are parameters built into the payment factory so that it can function efficiently, is very key. Again, speaking to the collection side, which we've talked about, that speaks to the sales. Depending on the size and the sophistication of the corporate, we've seen corporates run in-house banks, so that they create greater efficiencies, and they're able to better manage their balances and their flows in a much more efficient way across multiple markets. We've seen corporate treasury functions run shared services that cover multiple markets, beyond even the treasury function, and to other strategic enablers, as a way of managing and creating greater efficiency. We've also seen corporates leverage application service providers, basically just an outsource model, where basically some of those functions are outsourced to third parties that they believe can do them more efficiently, so that they focus on the core of their business and the more strategic side of things. And of course, given the distribution or the footprint, some of these treasury centers can be regional based, or they can be unique centers that speak to other economies of scale that are inherent in the corporate in terms of its objectives and what it's seeking to achieve. So basically, key factors to consider when we're trying to achieve global cash visibility, which would speak to operating in more than one geography, or operating in multiple regions, and you want to create the value of this efficient decision making, having a global view. It's look at what's the size of the business, what are the industry norms, what are the what are the drivers, what are the sector-specific nuances, the nature of the cash flows, understanding the dynamics of the different geographies, because we're looking at multiple markets, what's the business culture. Um, Quite interestingly, in some of the francophone countries, they adopt the French model where businesses sometimes close, during a normal working hour to, you know, within a time span before they reopen later in the day. So just understanding the dynamics of those and the role they will play in running and managing a treasury function across geographies is very important. And of course, getting the expertise. From the conversation we're having, it's almost clear that the treasury function has become a jack of all trade. It's not just finance. There has to be a fairly good understanding of technology, because you're buyers of this technology, you're users of the technology, and you need to be able to also make informed investments into technology for now and in the future. So it becomes quite important that capacity is built within the treasury function that can have a deep understanding and appreciation of these factors that would help in decision making. So just to speak to the impact of global cash visibility and some of the challenges, some of which I've sort of touched on. But it's that if you're operating in multiple markets, then you'll be dealing with different regulatory requirements, which you have to have a good understanding of. If it's particularly in our market and on the continent, currency fluctuations and its impact is a big issue. We've all dealt with the realities of the FX market over the last few years. We get a sense of it in Nigeria. So now let's layer that with the complexities of or the realities of, say, the Ghanaian market, and if you're operating in more than 1 or 2, 3, 4 geographies in the market, and the need to just understand the macros of those markets and the challenges that face treasury functions on a day-to-day. Also the dynamics of payments and collections in those different markets. Markets are different stages in terms of technology adoption, in terms of the ability to leverage banking infrastructure, whether they be digital or physical, to manage and create visibility. In some markets it's quite granular, where mobile has taken deep root, and there's a big use of wallets in those markets. So we then need to say, look, how does transactions happening at that granular level flow into the corporates, depending on the sectors and the segments that they operate in. And of course, just having a good understanding of the different cash management practices across the different markets becomes very important. And there are a number of cash management models which I'm sure are known to the treasury professionals as to how we can leverage and better deal with some of these challenges, especially on the FX side. If treasuries are running in-house banks, then defining the protocols for invoicing and factoring within the group and the function becomes very important in terms of managing some of these challenges and making it more efficient, so that the greater goal and the objective is achieved. So basically, I mean, the idea was to say, look, this treasury automation that we're focused on, that we believe to be strategic, that we believe will help us achieve our objectives. What are the 1 or 2, 3 benefits that we've seen for corporates? And I think from our conversation thus far, and I think from personal experience as well, particularly for treasurers who have, been in the function over a period where we've seen the value of technology, take greater root in the last few years and the last few decades, it becomes quite clear just the efficiency, the optimization of working capital, the value it creates, the more efficient cash conversion cycles that are achieved on the back of these technology investments, being able to be more efficient with payables, and also greater control and visibility of receivables, and better management of inventory as well. We on the telecom side, we see how it's created a lot of value, just in terms of better cash forecasting. You look at the sorts of investments that have been made in that sector, in our market and globally, and that continues to be made. You see that leveraging the technology has created a lot of value. On the logistics side, that is one of the areas where we've seen a lot of transformation between how businesses leverage and use logistic firms today and relative to how they were used years ago, and the sort of value that they've created in being able to deliver to the last mile, and just create and leverage, digital technologies to create more value, to create a better customer experience and user experience. You're trying to track a package. Gone are the days when you can't door to door. You can literally just basically work that journey of what it is that has to be delivered, where it needs to be delivered to, and where it is on the journey. And that technology has been replicated even on the payment side, for people and for treasury functions that make foreign currency payments. The value of Swift GPI in being able to track a payment, and basically give feedback where that payment is at any point in time on the journey. Again, we just see how technologies are being replicated across industries to create value as well. Then speaking to the benefits to the employees, I think it goes without saying, if value has been created for the corporate, then for the teams that run the treasury function, we see a lot of examples where just leveraging of cloud-based technology, workflow solutions, has streamlined previously manual processes onto various digital channels and applications, and helps corporates to be able to operate across multiple geographies, and be able to leverage the value of doing so. One of the solutions that I spoke to when we talked about the typical architecture to be considered, one of the capabilities basically was the options of leveraging corporate Swift. If you're able to do that, then you are able to, in that application, touch your multiple banking relationships, have statements from them centralized, whether it's a 942 that gives you an intraday view, or whether it's a 101 or an MT 103 with which you'd make payments or payment instructions to those various banks from your own ERP. When you compare that with the reality of treasury functions that had to typically log into each single banking partner or finance partner's application, it has created great value, made their work more efficient, and frankly leaves room to do more strategic things, relative to the just baseline functions that technology can help address. And of course, the touch points between the ERPs that have been invested in and the banking application makes life easy, where there's a direct integration as well. So just in terms of the benefits to the employees, which we've talked to, leveraging rule-based robotics processing, the investments in artificial intelligence, also helps the team develop and stay, at the cutting edge of what is happening globally and what is value. So basically, we're not static, we're not stagnant, we're evolving as our roles are evolving as professionals. and also leveraging the tools that we're now working with in our own personal development. So I think there's a correlation between the investments being made in technology, the value to the corporate, and the benefits to employees in the treasury function. And basically, a greater focus on this and more investments in this regard will continue to see personal development, personal growth, and see our treasury teams and treasury functions stay on the cutting edge. So just to share with you the FirstBank's value proposition around this, that speaks to some of the value that we've discussed, some of the various options and the various investments that are being made to create the greater efficiency, to create value for the corporate and employees in the treasury function. We've made a very strategic investment in a single platform called FirstDirect, and it's our transaction banking value proposition that basically is responsible, creates a single window for cash management, so both payments, collections, account receivables can be viewed on the platform. Integrations can be made directly to your ERP, so that there's a centralized cash view that you have of your payables and your receivables. That can be integrated directly to your ERP, so that again, some of the values that we've touched on are achieved on the platform. We all know that particularly in our market, trade is an essential part of business, and trade in Nigeria is very multifaceted. There's a lot of documentation. We've all seen some of the challenges with managing that process over the last few years, with the paucity of FX and the number of times that treasury functions have to go to the CBN bid to close out a trade. So having a trade system, a trade application that helps streamline this process from the initiation of the trade to closing it out with retail bids or any of the bid process through which the trades will be cycled out and closed out, becomes very critical. And what we've done is create a single interface for both the cash and trade side. Of course, what is at the heart and what is at the core of the treasury function is not just cash and trade. There's the vendor side, the supply chain, managing it more effectively, and being able to leverage where you are on your working capital journey. So whether you have a cash surplus or whether you have a cash deficit, and you're looking to find more efficient ways of managing that working capital cycle, one of the levers that you have is how you manage your supply chain, and being able to do that, whether more effectively to drive the efficiencies that you want, becomes very critical. And what we've done on this platform is create a working capital supply chain module that allows you manage your suppliers, manage the financing process for them, where there's excess liquidity and you're looking to spontaneously finance them, or if you're looking at the bank to handle that process and finance the suppliers, and so that the process is more efficient. Again, this is all on this single platform that the treasury team can leverage and interact with the bank with. Also, what we've done post-COVID, it's become more imperative, the need to have access to this application on a mobile form. So there's mobility access, you can access it on the go. All the different modules can be accessed for decision making, whether it's our colleagues who are initiating the transactions or the executives who are approving the transactions. Everyone has access, and it's been customized and formatted in a way that the look and feel reflects the logon anywhere through any channel, so that it's quite efficient. Again, we talked about the reality of treasuries or businesses looking to operate in more than one market. FirstBank is present in a number of geographies across Africa. For our clients who have businesses in multiple geographies, there's the ability to be able to leverage the platform for those specific markets. So basically, a single view at the regional treasury office function that allows you visibility into what's going on. So we have clients who are operating in Nigeria, in Ghana, in Senegal, and some of those clients are leveraging the application to be able to make decisions and drive their business across markets. So just quickly run through, and basically a number of the functionalities that are on the platform we've spoken to, the ability for you to make payments, direct integration to your ERP, the ease of making, whether they're single or bulk payments, because these are corporate payments, the importance of being able to future date those payments, basically for it to fit the objectives of the treasury function, are all embedded in terms of functionalities, and also on the collection side, we have that sort of detailed view that allows customization, that allows invoicing, that allows a single view of the objectives of the corporate to be achieved, whether you're trying to drill down to where the receivables are coming from, or where you want to drive growth in your distributive chain, or in the sales BU. The platform is able to help create the strategic data that you need to help make those informed decisions. So just speaking to client feedback that basically speaks to and resonates along some of what we've touched on. I'm sure the association will share the deck. But I'll just like to speak in just basically to conclude to say, look, what are the critical success factors for adopting technology? I think it's extremely important that we have the right capabilities and competencies that have a broad understanding of not just the finance function, but have an appreciation for technology. So the point I made earlier about the treasury function now being a jack of all trade, with technology being at the heart of it. The sheer just maturity and vision of the treasury function is also important in terms of directionally where it wants to go, and also that the function being strategic in the objectives of the organization in driving growth is a clear objective. So in my view, I think the future for corporates really lies on the shoulders of treasurers and the treasury function, because the decisions around the investments that need to be made, or the process they go through to make those decisions become very key, and that it's quite detailed. They engage, they do the work that needs to be done, look at the entire infrastructure before making the investment. And basically we've seen the function evolve, from where it was just, okay, let's focus on getting technology so that we have initial efficiencies, but we've started seeing standardization over the years. We've seen a focus that tended to be around reducing costs, bringing down the cost of finance, and that. But I think where we are on the journey is where we're looking at more value-added strategic value from the treasury function, just in terms of the growth objectives of the organization. And I think when we look at the tools that are available, the technologies that are available, the value that they potentially can bring today, now, and in the future, whether it's to open new markets, whether it's to have deeper insights on the business, whether it's to make more real-time decision making, we then begin to see that with technology, or like as technology, our treasury functions cannot be static. They must continue to evolve with the technology. We must continue to make investments in people, and broaden their horizon, so that basically um, the the imperatives for which investments have been made today are clearly ripped now and in the future, and that scale is achieved on the back of those investments. So we see this as a journey. On the FirstBank side, we're happy to be with you on the journey. We're happy to work with you. We're happy to bring the experiences, the competencies. Banking has leveraged and been at the heart of technology, perhaps more than most sectors. And we've had interesting experiences that we believe we can share and can bring to bear on the journey with our clients. So thank you very much. Thank you.
Thank you. Thank you, Mobolade. That was a very good one. You saw me laughing when you were trying to pitch FirstBank as being at the cutting edge. Do we have time for Q&A? Okay, all right, good. It's interesting for me listening to you, and the emotions is mixed for me, and I'll tell you why. Because I started on this treasury journey since 2004, 2005. That's when I got into the whole treasury landscape. And at that time, I'll put myself as an example of the average treasurer. We faced two headwinds. Number one headwind was the bank, in terms of acceptance of the technology, and then the second headwind was from the corporates itself, and about their willingness to fund the investments in the technology that needed to be done. And I recall at that time, this was 2004, 2005, we were understudying certain treasury management systems, and we knew that it made a lot of sense to have this cloud technology, what we call software as a service, and that instead of having the server-based installations that were too expensive, too limiting in terms of the infrastructure, and so we understood all the advantages of having this visibility, because ours was an organization that was multi-country, multi-continent, multi-currency, multi-entity, multi-business nature of business. So it made a lot of sense to have something that could aggregate all that position, whether from a global perspective or from a regional perspective or even from a local perspective. So I'll tell you, for instance, that what I inherited as a treasurer then when I was given my position was I inherited about 30 banks and over 300 accounts. And so it was a nightmare, just even trying to understand where is the cash. It was a nightmare, And so, because we understudied this treasury management system, we went from bank to bank, and we tried to say, okay, so is there a way that you can help us ensure that the data comes to us and not we going to you to get the data? Because if the data comes to us, the information is in our control, then we can actually, analyze it the way we want, and then, have this visibility to be able to do all that. It was a nightmare. The banks were not ready to deal. The banks will tell you, oh, our internet banking is there. All right, so how am I going to do internet banking for 30 banks? It's a nightmare. But because there was one particular file format that all of them were comfortable with, which was the MT940. So that was one. Oh, okay, we can give you MT940. All right, fine. So we're able to just do the basics. And even in the MT940, they were not even ready to send it through the Swift network, They just want to do it to you by email. So there was a lot of challenge in acceptance. Now fast forward to today, it's a different ball game. Almost every bank, virtually every bank, is now offering that as a service, as a product itself, that's packaged together as a treasury management, cash management solution, for the client. So that's why I say for me it's mixed emotion. I'm excited, I'm happy because we've worked from there, and then on the other side of it, which is the management side of it, you found out that corporates now are more willing to invest in technology. I remember the first time I did a breakdown of the cost of the investment it would take to invest in this, and I went to my deputy MD then for the presentation. He looked at me and he was like, "What are we going to get out of this?" I said, "Sir, just let us do the investment. Let's come after 1 year, and then don't give me my bonus." And then he said, "Okay, fine, I'll take you on your word." And then, so he approved the investment. It was several millions, yes, but he approved it. And then by the time we did the analysis after 1 year, we saved 20% in finance cost. So he came back and said, "Yinka, bring your boy. What do you want? What do you want? New staff, new car, new..." Anyway, and so the beauty here, which is what I wanted to emphasize, is that a lot has moved from the part of the industry itself and the acceptance of how technology shapes treasury today, such an extent now that it is moving at a pace that a lot of treasurers are not even catching up. So I listened to you. You were talking blockchain, APIs, robotics, AIs, and I'm wondering that how many of us are lost in all this conversation because you appear to be talking above a lot of what people understand. But it's the reality that as a treasurer now, you're going to have to deal with not just being qualified professionally in finance. You also have to be a technology person. That's the reality, really. So I just want you to, to just in a way that a 5-year-old can understand. Okay, so consider me like a 5-year-old. I don't know Jack. All right. So a treasurer is sitting down there, and all he knows about treasury management tools is Excel. That's all he knows. He still does internet banking because that's what FirstBank insists he has to do to be able to do that. Maybe not FirstBank, another bank. All right. So what steps do they need? So if today the treasurer wants to be able to go to his organization to say, "I want to present this. I want to be able to. I see the advantages of this, but I don't know where to start. So where do I start? And how do you explain all these tools, the APIs and all, artificial intelligence and things? How do I make a case that I can take to my management?"
So I think and I like the backdrop you gave, because you really basically just walked, the journey of anyone that is having to answer these questions. And I think the starting point really is that treasury functions or organizations are sitting on a lot of data. So there's historical data, there's current data. So whether it's your sales ledger, whether it's your bank statements, whether it's your payables, you're sitting on a lot of data. Now, this conversation we're having today is around how do we leverage technology to become more efficient, and you touched on it. If we're having this conversation with a treasury function that is still using Excel, and basically looking to take the next steps or to make these investments, the investments are not cheap. They're huge, and that's why, we'll define them as investments. They're made for the long term. Whether it's trying to define or agree the value a treasury management system would bring to you. If today that treasury function is interacting with multiple banks and having to spend man hours reconciling bank statements in the form of an Excel spreadsheet, then that easily becomes one of the quick wins to say, look, how do we take the payments that are made from your own system through the bank? How is that payment made in a way that the need to reconcile the payment back to you or back within your system is done in a seamless manner? How do we capture receivables that are made by your distributive chain into the organization in a way that helps you identify who made this payment, when was this payment made, where was it made? And therefore, you start to build more useful insights, more useful information that can be used to make more strategic decisions as to where to invest further, where to channel your resources, whether it's to drive your sales team to identify where there's a huge potential and where. So I think it is taking it and breaking it down in that sort of simplistic manner, really, to say these are the immediate benefits that you can achieve as a treasury function when you make these sorts of investments in technology. Do this in a more efficient way, and ultimately in a more cost-effective way. The investments might be huge at the outset, but when you amortize it, when you realize that you can streamline your resources and deploy them to where they're best needed, then you start to paint and see a picture that is of value to the organization. And I think organizations are evolving, organizations are changing. It becomes, no one wants to be left behind. You are not an island in the industry that you operate in. Some of these investments, some of these calls are the calls that will give you a competitive advantage in the industry in which you operate in. So there's actually real value in making this investment, in becoming more efficient, and in working with partners to help you on this journey. I think one of the in a very just sort of simplistic way of looking at it is to identify the key stakeholders. So whether it's your distributors, whether it's your suppliers, and begin to sort of back of the envelope SWOT analysis, identify where the bottlenecks or where the challenges are and where you need that efficiency at a greater level, and then you begin to see how technology can help solve for those specific areas. But I think the universe is huge. I mean, you talked about some of the trends, some of the directionally where we're going, with for example blockchain technology. I mean, just if you think about the complexities of for a lot of businesses in the FMCG space of managing distributors. Now imagine that interaction between the distributors and the corporate is happening on a blockchain infrastructure, on a distributed ledger infrastructure that allows for transparency. Whether it's pricing, whether it's the quantity of goods, whether it's what we define as potential collateral in that process, depending on the nature of the sector of the FMCG. you just see where, you close your eyes and you see value in the future. You see greater efficiency. You see where some of the bottlenecks we deal with today, even for banks, in making a decision to finance or to support a distributor. Some of the information today is very opaque, which is why, supporting that sector is a bit difficult. Now, if I have greater visibility of the network of the interactions between the distributor and the corporate, then my decisions to lend, to support, to drive expansion becomes easier. So it's a win-win, and I think that's why even for us, as a bank, a lot of the investments we're making are with the strategic intent of solving for this problem, not just for ourselves, but for our banking clients, which is why we've made the investments we've made in First Direct 2.0. Thank you.
All right. At this point, I want to bring in Denis. Oh, okay. Sorry. I understand that there might be questions from the audience. Do we have any questions? No questions. Okay, fantastic. So let me bring in Denis here, and I think this is where we will begin to see some of the things that Mobolade is saying, because Denis will basically present to us the value presentation from Ceviant, and I think that we will be able to see how we can. So the average treasurer that is looking to integrate and implement automation will actually see in the presentation how they can go ahead to do that. Denis, over to you.
Thank you very much. First and foremost, Mobolade, thank you. That was very fascinating insight on how FirstBank are approaching corporate treasury. And obviously as well, Mr. Ogunnubi, being in CFAO of a global company, you've been fortunate enough to invest probably in a very expensive solution. But I think there's two things that I wanted to pull out from this, which you both alluded to before I really sort of dive into this. Number one, there's definitely a significant investment required in corporate treasury platforms. And you have two options. You can either go and buy it off the shelf, go and invest in that software, or you can approach the software as a service approach, which you mentioned to earlier, which is really what Ceviant's built on. And if I had to summarize what Ceviant's trying to do, I would say we're trying to democratize treasury. We believe that everybody should have the opportunity to leverage the latest technology available, but you shouldn't have to make a huge financial investment to enjoy that. You can adopt a subscription-based service that will allow you to have, that latest foresight. And really, when you look at the sort of the financial, the fintech platforms, where their investment goes is basically in building these systems and solutions that anybody can use. So, if I look at who Ceviant is, sorry, I can't really see this one. Here we go. Okay, thank you. So we're a UK-based financial technology company, and as I said, we've built treasury and trade solutions that include cash management, cross-border payments. We also have something called escrow, which we think is a very exciting technology, and I think it will definitely play to help corporates here in sub-Saharan Africa and working capital across a really diverse and sort of client base. So we look to basically provide treasury solutions to any vertical and really any size of business. And as you alluded to earlier, managing corporate treasury is extremely complex. If I take a step back, I remember us when we actually came up with the idea of Ceviant, and you've mentioned it both twice. It wasn't in 2004 though, it was probably a little bit later. But we noticed when we were running a previous company, I had 4 bank accounts. And each time I had to log in, I had to download an Excel sheet, and then I had to consolidate all of those into one sheet, and then pass it back to my account department. And this was as late as 2016. And it was highly, highly inefficient, and at the same time it wasn't real time. So we were always 24 to 48 hours outside what we needed to know. And the other thing that we all realize is cash flow is the lifeblood of any business. And if you don't have a really good view on your cash flow, you can slip or you can miss things. So then we started thinking, well, why can't we provide that centralized interface that allows you, exactly as you said, to bring the data to me? So I don't have to have one person just downloading spreadsheets. To me, that didn't make sense. It's not effective. That person could be reorientated to do things which are far more productive for the business. So that's really where we started thinking. And then we realized that Treasury solution or Treasury functions, they touch on many, many parts of your organization. As you said before, it requires compliance, it requires data management, it requires technology, it requires sales, it requires business. So when you look at Treasury or the Treasury department, it's extremely critical to any organization, and it gives you that 360 view, especially from your finance. And if you can go away from being pulled away from those manual processes, and then it really allows your senior managers to think strategically. And I think that's really where the value of the business comes. I should not have to be downloading spreadsheets and putting them to Excel. I should be spending my time in analyzing my data and seeing how I can best put that cash to use in my company. If I don't do that, then I'm playing catch up. And for me, that doesn't really work. It doesn't make you more efficient. So, as I said, when you look at some of the challenges, or what automation definitely helps, it definitely helps you to get rid of those inaccuracies around where your cash flows and where your liquidity is. Limited visibility into accounts payable and accounts receivable, which we touched on, is extremely important. And definitely being able to predict where your cash is and how it will be available can definitely hinder you as an organization. You also have a high risk of cash shortfall, or actually excess cash. You may have those windfalls when you have a pooled money that's actually not sitting there and actually making you money. You can't invest it because you're not aware it's there. So the ability for you to have that 360 view around where your cash is extremely important. I think fraud's a huge part as well. A lot of requirements around security, and if you have lack of visibility into your cash transactions and you have manual processes, you can it's very easy for you to mismonitor what should be coming in. I mean, we've heard of countless stories of people giving dummy bank accounts, for example, and cash going out, to third-party accounts, and you won't even know that's existing. And if you have a mismatch between your bank and your ERP, things can slip through the gap. A very, very important part as well is compliance, making sure that you're compliant. As Mobolade mentioned, if you're multi-jurisdiction, multi-regulatory countries, how you offer and how you adopt compliance is very, very important. So one of the things that we decided when we sat at Ceviant is, I said we need to understand or think how a treasurer thinks. And when you look at, for example, just initiation and approval roles in any business, typically you can have multiple signature sign-off. If you look at a bank account today, if I'm in a treasury department and I say to someone, okay, you have visibility access only, but you can't transact, they can still see everything in that account. They can see payroll, they can see where the payments are going, where the payments are coming. So what we did as our organization is we said we need to make it as granular as possible, because one of the things that a treasury management function will have to do is it will have to meet the business processes of that organization. So for example, one of the things that we've said is you can give access to a junior account officer only to review a specific account or a specific type of transaction. Or you can be the CFO and you can have the bird's eye view over everything that you want to do. But that granularity around compliance, when you actually dial it back from a technology point of view, when you look at a business, the business processes, that automation, you can't take a technology and try and push it into a business. Your technology must match the needs or the business requirements, hence we have BRDs, right? Of how my technology is going to help my process. So that that requirement around sort of compliance, the view access, the transaction access, who can see what, how those rules can be implemented are extremely important as well. Because if not, you end up in a situation where your Treasury department is trying to basically invest or put their time into a business function that doesn't work for them. Integrating data from multiple sources, we all spoke about that. As you say, really we see there's four types of integration. You have host-to-host, you have Swift, you then also have the Holy Grail, which is API, and then as well you can also have FTP, where people will send T+1, T+2, and then you just pull that from an FTP server. Reconciling cash balances. One of the things that we've built our platform really as an API-driven technology. And one of the things that's always fascinated me is why should account departments be chasing receivables or not knowing when someone has made a payment and it's come into my account and my service hasn't been delivered or turned on? And that can be for a number of reasons. It can be the wrong reference number. It can be, I can see Mobolade smiling here. It can be, maybe the beneficiary's name is spelled incorrectly. My name is often, Ibrahim as opposed to O'Brien. So, you have those syncrasies, and then you're chasing your tail trying to reconcile this payment. You have an angry customer. So what we've tried to do is we've tried to remove that headache and automate it as much as possible. Monitoring multiple bank accounts is extremely important, and that requires you integrating your API into as many banks, or the banks that your customers want you to. So you start creating that platform. And I think the way you put it was very pertinent. Your data should come to you. You shouldn't have to go to your data. That's what technology gives you. And then obviously detecting unauthorized transactions. We live in a world where people will always try and circumvent systems. So having those rules and processes in place, technology allows you to eliminate a lot of potential leakages. And then obviously forecasting your cash flow efficiently. I think that's very, very important. As I mentioned before, if you don't have a good handle on where your cash is, you can't really be effective. Oops, sorry, I keep jumping slides here. Okay. Okay. So yeah, what we try to do at Ceviant, obviously as I said, is we help you supervise your cash flow. We also help simplify cross-border payments for our international clients. As you said, we're UK based as well. We've also spent a lot of time integrating into Swift. So we're very happy and proud to announce that we also use Swift GPI as well. And we think it's very important for you to be able to transact and see your transaction on a step-by-step flow and in real time. One of the biggest challenges that I've seen corporates, not just in sub-Saharan Africa, but potentially in other parts of the world, is, I'm sure you will have seen this, where's my telex? Where is my telex? And once again, we said, well, technology can take care of that. The moment a transaction occurs or it's hit the Swift network, we automate and send that email, and it gives you the option to send it to your counterparty and or just to yourself to say, here's the payment, it's gone. And as for people who mostly don't understand the Swift network so much, Swift is actually a messaging network. It doesn't actually carry the transaction. It just is a huge messaging network between banks globally that basically says, is messaging, here's the flow and here's the transaction, and the banks then arrange themselves. So really, it's like a postal service. And exactly as you alluded to before, nowadays you can track parcels online in real time, and Swift is now allowing you to do that. You also mentioned Swift Corporate as well. That gives you the ability to leverage Swift to basically see where your transactions are and obviously see where your balances are. When you look at global treasury companies, the big players that claim, or I shouldn't say claim, that have connectivity to 10,000 banks or 15,000 banks or 1,000 banks, it's really leveraging the Swift network. It's not API, because when you have to develop an API solution and you implement to a bank, and Mobolade be aware of this, it takes quite a lot of time. You have a lot of testing. It's a significant investment for you to have that API connectivity. But once you've done that, the business efficiency and savings you get are really unparalleled. And for us, that's a very important play for any corporate. As you said, keeping track of your bank accounts, we've built a centralized interface. And when you come onto the Ceviant system, it gives you the opportunity to see everything in one place from multiple banks as well. And I think this is a very important point for us to make. Us as a software and a fintech company, we're not a competitor of FirstBank. We don't compete with First Direct. We're partners. And the reason I say that is, if I look at CFAO now and I ask you how many bank accounts you have in Nigeria, you probably have more than one. And FirstBank can provide a fantastic service for FirstBank. But what do you do when you have Bank A, Bank B, Bank C, Bank D, Bank E? You either go and build and buy your own treasury platform, and then you have to go and integrate it. Or you come to someone who's done the heavy lifting or is doing the heavy lifting like ourselves to say, I have that connectivity into A, B, C, D, E. And the other way I look at it, when I talk to banks, I'd say my goal or Ceviant's ambition for a bank is to push transactions. If I have a highly efficient platform that helps my customer and the bank's customer being able to reconcile, send payments, receive payments, get all their data in one place at one time efficiently, I know that they'll use my service or our service more and more. And ultimately, when you look at transaction banking today in banks, it's probably strategically for me, top one or top two most important parts of the ecosystem. I think just breaking out slightly from the presentation, if you look at what's happened in Nigeria, when we implemented NIP and NIBS went live on instant payments, that happened probably 8, maybe 10 years ago. I get a little bit lost, but it's a little while ago. But that happened before the United Kingdom, before the US. And there was a huge push into retail and payments. And if you look at the fintech sort of business or ecosystem in Nigeria today, a lot of it is retail based. And just prior to us starting this webinar, I was talking to Mobolade about this. And we said, well, what's happened to the corporates? Who's building the solutions for the corporates in this fintech platform? And that's exactly what we were discussing. And I don't want to use the illusion that corporates have been left behind, but if I'm running a business, whether I'm an SME or I'm a mid-sized company, my needs from the bank are different from a retail customer. Bulk transactions, the way my data is displayed, am I connected to Swift? So it's a completely different mentality and ecosystem. But when you go and talk potentially to, say, the bankers or the corporate bankers who are facing their corporates, what they see is, as you said, internet banking doesn't cut it for them anymore. So partnering with banks is extremely important, not just for the corporate, but also for the system in general. We've got businesses in multiple vertical markets. As I said, it's very cross. We're very cross vertical, and obviously we've connected to a number of banks. I'm also happy to say that we've been speaking to FirstBank, but I haven't actually had the opportunity to come and pitch to you. Maybe I should do it live on this webinar. But hopefully we'll have FirstBank up there as well, which we think is critical for us. I'll just give you 2 examples on where I see. If I was to zone in on technology, I think virtual accounts are a game changer, especially here. And just very quickly, difference between a virtual account and a sub-account. A sub-account's pretty much tied. Think of an account within an account, but it has its own ledger, it has its own balance. It's really an account on its own right. Whereas a virtual account is almost like a unique reference number attached to a settlement account or a main bank account. So if I was to give you a real-life example on how virtual accounts can help businesses, if say I'm a pharmacy chain and I have 30 branches, I've got 2 options. I can have 30 bank accounts, I can have 1 bank account with 30 sub-accounts, or I can have 1 bank account with 30 virtual account numbers. And those virtual account numbers, think of them as like tags. And you can assign them to particular functions in a business, or into a subsidiary, or into a branch, or you can even put it against a product or a customer. So as those payments are coming in, whilst the money is actually going to the master account, it actually allows you to file and tag what that transaction relates to. And it's extremely efficient. Another example I'll give you of how this is being used is there's a solar power company in northern Nigeria, and they have about 4,000 customers. And as we know, we have very much a cash-based economy in northern Nigeria. So when you walk into a bank branch and you pay your 2,000 naira, and it's a manual process and a teller's uploading it, names get misspelt, account numbers get wrong, and you get very irate customers very quickly. But if you're reconciling 4,000 individual unique people paying cash, very quickly that can become a problem. So one of the ways that Ceviant was looking to help with that solution is we said, well, you assign a unique virtual account to each customer. So it's almost like his bank account. He said you walk into the branch and all you do is you put that number in. You don't need to put your name, you don't need to put your shop number, you don't need to put anything else. Our system will automatically reconcile that belongs to customer A and will automatically update your billing platform. So when you come to your mismatches, what you're finding is, out of your 3,000 customers, hopefully 100 are wrong, as opposed to 2,000 being incorrect. So the flexibility is definitely there. As I say, we think virtual accounting is very, very important, and it's one of those quick wins that you can adopt in this market. Treasury is continuing to evolve. We mentioned blockchain was mentioned, machine-to-machine learning was mentioned, AI was mentioned. All of these are cutting-edge technologies, but that requires time and investment. And if you're a businessman and you are trading, then really what you're looking for is a solution that takes away that headache of understanding the technology in that granular detail. What you need to be able to identify is how will I make my business more efficient and how I'll become more cost effective. And I think at Ceviant that's really what we're there to do. As you said, we're a software as a service company, and what we try and do is when we speak to a customer, we really want to identify your problem first. What we don't want to do is come and try and sell you a solution that's not going to meet your needs. And I think when you, as I said, finally, when you look back on, as you said, when you're a multinational global corporate and you can afford 2, 3 million, 5 million, whatever it is, you're in a very fortunate position. But if you're a company with a turnover of 50 million or 100 million naira, I want to give you the same tools that CFAO enjoy, because I think that's very, very important. Not just from our point of view as a business, but also for the economy, for Nigeria, and for Sub-Saharan Africa as a whole. We are in a unique position where we can leapfrog legacy technology, and we can do it at a fraction of the price. And really, I think, as I said, Ceviant is set up to democratize treasury for any corporate in this part of the world. Thank you very much.
Thanks, Dennis. I almost give you a round of applause. That was very concise. Please, sure, let me know if there are questions. I want to. There's several things you said that I think jumps right at me, and that's aside from your dig about how expensive our solution is and all that. I get that. And I think you're absolutely right, because corporates are at different levels. And to a large extent, when we talk about some of these things we're talking about, especially the suite for corporate, the integration and all that, it could be a bit complicated. Sometimes when you have to do the SwiftNet contract, and you have to get legal, you have to do quite a bit of compliance and all that. So the corporates are kind of, when I say corporates, I mean the big corporates. They are kind of they have some kind of advantage in getting the premium quality treasury management system set up that has all the different components, the modules, the payment factory, the trade modules, the APIs that connect directly into the ERPs. So a lot of what you're saying, a lot of the big corporates can, they can connect to it. I mean, it makes sense to them. The challenge is when you find other corporates, maybe local corporates, are not that big, and they want the same quality of service, but they can't get it either because they think it's too expensive from an investment perspective, and so they want, they want the same service, but they don't want it as expensive as that. They want software as a service, a subscription-based service, All right, and I think that's where Ceviant actually has value that it can present. So I want to ask you, for that corporate treasurer out there who says, okay, I'm not CFAO, I can't afford that, but I want the same quality of service, and I want to use your service. What's the onboarding process for them?
Thank you very much. For us, obviously, compliance is very important for anybody. So, I mean, typically you go to our website, you'll see request an invite. You'll literally click on our button. You'll fill in a very simple form, and then that will come back to us. You'll then go through a situation where you have to upload your corporate documentation, because we have to vet. I mean, we're regulated, so you need to have your documentation in order, your CAC2, your articles of association, your tax clearance. We have to go through and check all of those things, exactly as if you're onboarding to a bank, really. But all of that's uploaded. You don't need to physically come to a branch. We then have our compliance team that goes through that process, checks and vets all of that documentation, and that can take, depending on how fast and how accurate the data is, it can be done as little as 24, 48 hours. Then once you're onto the platform, we then allow you. Obviously, you've gone through that. We then allow you to set yourself up. You go through the our two-factor authentication process. So we use 2FA for a number of things, and that's used on your mobile device. We download your software token. That then makes sure that every time you log in, rather than just your username and password, you have a third level of authentication. And then what we then do is we then hopefully then start to connect your bank accounts to the banks that we're connected to. If you have an existing bank account on one of our bank accounts, you can connect that bank account, and then from there you can then start to enjoy, for example, the view of where what your accounts are doing. You can then add virtual accounts on the fly. And one of the advantages of the virtual account is if you want to spin up a virtual account, you can do it from your computer. You don't need to go to the branch. You don't need to speak to your bank manager. You don't need to sign any forms. You can literally spin it up and it's ready within 2 minutes. You can then assign that to your project or to your customer, whatever you want to do. So I think and we do that in partnership with the bank. Yeah, definitely. So from within that virtual account, you can make and receive payments real time. It's like an account. It allows you to basically make those payments in real time. And then if you have an ERP or a back-end system, we then help you integrate that. So the advantage being with the virtual account, what we've done before is it allows you to create an invoice. And within that invoice, you can then set up everything. You can send it to your counterparty. And when he clicks to pay that invoice and he makes that payment, it will hit that virtual account and automatically reconcile into your back end. So when you're not asking, has my customer paid? Your system is notifying you, your customer has paid. And that goes back to what you were saying, that the data should come to you. You shouldn't chase the data. Does that answer the question? Oh.
Thank you. Sure. Okay. Just to follow up on that, especially on the virtual accounts. Now, I'm particularly interested in that subject as it relates to. Shewan can also, contribute here, as it relates to cash pooling. Because one of the big advantages of having this visibility is to be able to see how you can concentrate cash, or to manage cash in terms of moving cash from inefficient positions to efficient positions, just to be able to manage your cost of fund. So from a bank's perspective, I'm trying to understand how that can function. How does this virtual account help in a cash pooling infrastructure?
I think really for me it would be from a visibility and efficiency point of view. when if I have one settlement account, and underneath that I have 1,000 or 2,000 or 20,000 virtual accounts, for example, I just use those as numbers. Your cash is in one settlement or one physical bank account, but the virtual accounts allow you to basically organize where and how and when those cash flows came through and who they relate to. So for me, I think that virtual account, it's more about making your processes and your receivables efficient. In terms of the cash pooling, because it's sitting at that corporate layer, or it's sitting at that settlement account, you can instantly see, under that subset or under that particular project or department, all of those flows, all those funds sitting in that one settlement account. So, from my understanding, that pooling allows you can have 3 or 4 accounts, 3 or 4 example, settlement accounts, but underneath that you can have a vast array of virtual accounts that are basically tracking different aspects of your business.
So I think just to add to that, there are options. So if you're looking to pull cash or to have greater visibility of your balances across, there are various cash pooling structures that you can achieve. There's where notional view of those balances, where those balances will not necessarily move accounts where they are, but you can have a console of whatever this. Targeted sweeps of the balances to a designated account that you want to have visibility of those flows in. So I think and that typically is the sort of cash pooling structures that are available in the market and that are available to you. I think like he touched on it, the virtual accounts really serve to pull your receivables from unstructured forms of how those receivables come to you today. So they basically serve a recon purpose, and also greater efficiency, greater management of those, and just basically to be able to drill down to say, look, these are where these flows are from. This is the volumes that have come from them, and then to the point where you can either tie them to either products or to the different sort of downlines of your value chain that you're trying to drive or that you're trying to have visibility of. But in terms of accounts that are already held, you'll be best served, just looking at what your objective is. If it's just that you want to have a consolidated view, either so that you can make investments and have greater control, then you could get a notional view where those balances don't necessarily move, but you would get visibility, a consolidated view of those balances notionally without them moving from the accounts where they are. Yeah. It is notional view, yes. So it's notional pooling. So if you think about it, if particularly across in your business where you have multiple subs that are even different BUs, that you could have one that is a cash cow, you could have one that is borrowing. No.
That's exactly what I call that consolidated view. Yeah, that's exactly what we have, and that's what we're trying to do. So when you connect to a bank, all of those accounts, sub-accounts, investment, everything you have in that bank account is automatically pulled into our interface. Everything. So you automatically see, as you said, your cash flow account, your investment account, anything which is held within, for example, FirstBank, you would see on our platform. And then from there, you can then create the additional virtual accounts that you need. And we'll do that across multiple banks.
and that's why and it is a create value for the corporate, because they give you a treasury management solution that is bank agnostic. Relationships as well.
Sorry, just one more thing to add to that. I think it's very important. Is I think if you look back in 2004, when you were identifying the treasury systems, banks were very much in silos. Come and use my internet banking. Come and use my internet banking. But that shift has now changed. Exactly, what Mobolade was mentioning earlier. It's your corporate that's driving that requirement, and you as a bank, you can't hold that corporate to say you must use this, you must use that. What the bank wants to be able to say is, let me keep my corporate happy. If he's pumping more transactions through my transactional banking, I'm making money. And if I'm making him more efficient, he's going to be a happier customer. Whereas if I'm forcing you to use my internet banking, I don't need to. You've been there.
Oh, thank you. I think we are at...
All right. Thank you very much. I would just like to ask. We have been discussing TMS and how it can actually help us in the area of cash visibility. Can we have a demo session of all these things we'll be talking about? A session whereby we're able to see a step by step on how we can use maybe the FirstBank TMS system or that of Ceviant, where treasurers will see how it works. How by that they will not get to know, okay, I can actually use this for my business or for the kind of things I do in my treasury department. Thank you so much.
We actually have a short video. I think it's just started now.
Or an individual trader, Ceviant provides you with unique products and services that grant you full control over your company's treasury. Ceviant helps you to supervise your cash inflows, oversee domestic and international transactions, and keep track of all your company's bank accounts, all from a single dashboard. Simply connect all of your company's bank accounts to your Ceviant dashboard, and you can handle any cash transaction, all in one place. When it's time to pay your employees and other beneficiaries, there's no need to look for an external invoice builder. You can create a new invoice right where you are and save these documents on your dashboard for future reference. It's that easy. Alongside your physical bank accounts, you can also create virtual accounts on Ceviant to reduce the cost of handling multiple physical ones. These sub-accounts can be dedicated to settling different counterparties and to ensure you have enough cash on demand when the need arises. Ceviant also simplifies foreign exchange activities by providing you with accurate exchange rates and competitive prices in over 30 different currencies. Furthermore, you don't have to worry about fraudulent payments when using the Ceviant platform. With KYC verification, two-factor authentication software, and digital escrow arrangements, Ceviant ensures that all transactions are legitimate and secure before being authenticated and approved by you. Your accounts and financial transactions are organized and transparent with Ceviant, allowing you to maximize productivity while controlling your cash flow. We provide everything you need to maintain financial stability so you can focus on growing your business. Join Ceviant today to take charge of your company's treasury.
Hopefully that answered the question, or gave you an overview, a visual overview of what we can do.
What we can do is that for our members who want to have dedicated live demonstrations, we can actually arrange that, for them, either first direct, the way I see it, there's a lot of value. Wait, hang on. Okay. It's a question, right? So there's a lot of value in actually seeing it demonstrated. I always know that, when you bring people into a room and you actually show them how it works, they get excited, and they can take this excitement back to their management, to their CFOs, and get it done. In fact, what I actually really realize is that it's always even better to have the CFO seated in the room, seeing this and seeing the value as it is. So, Sheon, that's something we have to do. I know that a lot of our members are interested. Like one of our members said, thanks for the seminar. Like Yinka said, I still use Excel after downloading from several banking platforms. I would like to see how to book an appointment for demo. So a lot of people, will be interested. A lot of treasurers will be interested. I can tell you that. I can tell you for free that a lot of treasurers today still use Excel, not out of choice, but because they're unable to get their management to approve the investment. And so I think that if we can do the advocacy and within the association to get our members to see the value. In fact, maybe what we will do as well is, if any member needs the association to even pay them a visit, I'm pretty sure that when they see the treasurers that are coming from the association itself, which are very renowned treasurers from big corporates, pretty sure that they will be welcomed, and these things are quite easy to do. In 2004, 2005 it was very difficult, but now it's plug and play. That's the reality. It's plug and play. Just sign the check, and that's it. It's done in few days or few weeks, actually. Of course. So, do you guys have final thoughts just before we wrap up? Because I think we're out of time.
No, I think from my side, it's been quite a useful and engaging session, because basically it's the conversation we've had this morning is like a conversation with kindred spirits. So I mean, the value proposition we've built as a bank to try and solve for wholesale corporates, hearing you share your experience of challenges you've had and how you've navigated that, and basically just validating that, like O'Brien said, we don't have people who have specifically looked at solutions for wholesale corporates on this digital journey, apart from a few, particularly on the fintech side. So as we on our journey look at the capabilities that we've built that solve for this on First Direct 2.0, looking at just that ability to give our corporates an ecosystem view across pillars that are important to them: payments, their receivables, trade, and being able to do that through multiple channels. And then the opportunity to sort of partner with Ceviant, as corporates that require the treasury management system that is also encompassing, that solves other problems, that the one-stop banking application, almost sort of where it stops and hands off and there's a handshake, is one that I've found. So it's almost like connecting the dots and seeing, a market approach of engaging with our clients to create more value. So it's been quite useful, and I'm thankful for the Association of Corporate Treasurers for giving us the platform to share.
Thank you so much, Mobolade, and thank you so much, Mr. Denis. I want to have a word from you, and it is very clear that our members truly want a live demo. So I want to get the word from you that our next webinar that will be coming up, will you be able to do that for us?
On our side, First Direct 2.0, we can do a walkthrough, we can do a demo to share the capabilities on the platform for members, and basically just take them through and also run pilots. Again, we're happy to sit with specific clients to understand the problem and the pain points that they're trying to solve for. So, like the treasurer who asked the question was talking about a recon problem, and trying to manage reporting in a more efficient way. For some, it might be on the distributor, on the sales side, trying to see, look, how do we get more insightful information that helps us solve problems. It might be managing payables process and paying vendors, and maybe the size of those payments and making them more efficient. So we're happy to have smaller sessions where we'll focus and try and drill down. So for us, we see this as a partnership working with the ACT. It doesn't end at this session. We'll continue to engage and talk. And if there are smaller sessions that we need to have before the next webinar, we're happy to do so.
Yeah, as you know, we're a partner of ACTN. We very much value the ecosystem. We'd be delighted if there's anybody on this webinar, the beautiful with Zoom technology, we would jump on a call immediately. We want to really understand what your pain points are. Happy to do one-on-one demos with you. We don't have to wait for the next webinar. We'll also, on the next webinar, of course, we'll take you through the platform. But we're very eager. We're very keen to work with those corporates out there. And we want, as I said, we want them to have the same experience that Mr. Ogunnubi has with his very expensive treasury management system. So we will give you those tools to make your businesses more efficient, and we're desperate to help. Thank you.
Couldn't resist having a dig at me, right? I get you. Thank you very, very much, Denis Mobolade. I am excited at the possibilities having the bank and fintech coming together. It's exciting. With corporate, yeah, with corporate and the ACTN in between. I think it's a fantastic opportunity, and if we keep this energy up, and we keep talking, and we keep collaborating, I think we will achieve quite a lot. The ACTN is really focused on trying to assist our members to ensure that we improve automation, and then we get every value we can get from the system. I love your small demo, because I could see that you were not just going just to treasury management, cash management. I saw invoicing. It's like virtual accounts. These guys are just trying to capture everything, in one small place. And I think that's the idea, that at the end of the day, I don't want to have multiple systems that are doing different things. I want to have one system that's able to answer all my questions and solve all my problems in one place. And as long as we have this kind of partnership between the financial institutions, the financial services, the fintech ecosystem that are providing the innovations and also the infrastructure in the system, we will be able to move forward and provide the kind of solutions that treasurers are looking for. So once again, thank you, Mobolade. I appreciate you. Thank you, Denis. And thank you, Sheon, for hosting us as well. I think, can you release me now so that I can go and stop Denis from keep digging at me? Thank you.
Thank you very much, sir. Yes, sir. So I want to thank everyone for this honor, and on behalf of the President, Mrs. Victory Olumuyiwa, members of the Association of Corporate Treasurers of Nigeria Governing Council, I extend a warm welcome to you all. I would like to express my gratitude to all esteemed participants of the webinar for their presence and contribution to make this webinar a great success. Thank you very much. We appreciate you all. So we're getting back to all our members on what the modalities will be for a live demo. Thank you very much.